Hello viewers, my name is Paul Baldovan III and I'm a first-year tax associate at Kaufman Rawson. I'm also a graduate student at Florida Atlantic University in the Masters of Tax program. And today I'm going to be giving you a federal tax update regarding the forfeiture of deposits received on the sale of real property. And I will give you an overview of the relevant code sections, Section 1234A, Section 1221, and Section 1231. I'll also be talking about a recent tax court decision, the CRI-Leslie LLC case, and I'll also be discussing the takeaways from the tax court's decision. So let's get started. So Section 1234A allows for gains or losses from cancellations, lapses, expirations, or terminations to be treated as if they were from the sale of a capital asset, given that there was a right or obligation to this property and the property was a capital asset in the hands of the taxpayer. Now, under Code Section 1221, which defines a capital asset, the code specifically excludes property that is used in a trade or business of a character which is subject to the allowance of depreciation. These are not capital assets, but are Section 1231 property, and that's an important distinction to make as we look at this case. So Section 1231 property is real or depreciable property that is used in a trade or business and held over 1 year. This can be favorable because net gains are taxed at the capital gains rate and net losses are taxed as an ordinary loss. So in the case of CRI-Leslie LLC, they acquired a hotel to use in their trade or business. They were specifically in the business of operating hotels. And this is very important because this is a characteristic of Section 1231 property. So about a year and a half later, they entered into an agreement to sell this property. They received a deposit. And a couple of years later, when the deal fell through, they reported the deposit as a net long-term capital gain. So the issue in this case was whether or not they were entitled to capital gains treatment or if they should have reported the deposit as ordinary income. And the IRS said they were not entitled to capital gains treatment because the asset was not capital in the hands of the taxpayer. They cited Code Section 1221, which specifically excludes Section 1231 property from being a capital asset, and therefore Section 1234A would not apply. So CRI-Leslie LLC, they did not dispute that their property was Section 1231 property. However, they argued that because the result of the sale would have been a capital gain had it gone through, that Congress must have intended to include this property in Section 1234A. But the tax court did not agree with that argument. They held that Section 1234A does not extend to Section 1231 property. And because the code was not ambiguous, they could only take the plain language of the code, which specifically excludes Section 1231 property, and therefore Code Section 1234A did not apply. So as we look at this case, this does not mean that a forfeited deposit on the sale of real property will never fall within the scope of Section 1234A. The use of the property is the key. So in this case, the property was clearly being used in the trade or business of the taxpayer, and therefore it was Section 1231 property under the code. However, the tax court did state in their opinion that if the hotel was held as a passive investment, then it would have been entitled to capital gains treatment under Section 1234A. So from a practitioner standpoint, and as practitioners, it's very easy for us to look at these assets and see them as capital assets because we see the result of a sale and we see that it's treated the same as a capital asset. However, this case reminds us that Section 1231 assets are not true capital assets. They only take on this characteristic and are only treated in the same way in the result of a sale. And that was very important in the facts of this case. So as we look at the relevant code sections, we look at the tax court's decision, we will be in a better position to advise our clients who are facing similar circumstances with their business property. Until next time, my name is Paul Baldovan III. Thank you so much for watching. Goodbye.